Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. I recently just had a conversation last week with somebody who was interested in investing. So they had been studying for about 6 months, but they stopped because they felt like trading was just gambling, and to them it was just throwing money away. So that inspired me to make this video where we're going to talk about what separates actual investing from gambling your money away in the market. But first, one thing that trading and gambling both have in common is that they do come with risk, and they both can seem like quick ways to either make or lose money. But that's pretty much where that similarity is going to end. When we start to look deeper, then we can see that trading and gambling are completely different. Let's get into how smart trading stands apart from just gambling, and then also shine some light on different strategies that make it more than just a game of chances. First of all, what is trading? Whether or not you're into day trading and you're getting in and out of the market in the same day, or you're swing trading. Trading is all about strategy. When we're trading, we're focused on market analysis, indicators from the economy, and sometimes even mathematical sequences like Fibonacci levels to make our decisions. Okay, so then what is gambling? Gambling is mainly about chance. That's whether it's a spin on a roulette wheel, a hand from a poker deck, or a quick trade for profit with no plan. You're basically relying on luck more than strategy. And that's not saying that there isn't a strategy there, but it is leaning more towards luck. The goal of gambling is straightforward. You want to win more money by risking money on an uncertain outcome. At the end of the day, yes, trading and gambling, they both have risk, but strategic trading uses tools and strategies that manage those risks, and gambling doesn't. When you understand these different distinctions and the methods behind them, then you're going to be in a better position to actually trade with confidence and avoid all of the uncertainty that comes with gambling. Now, let's talk about understanding risk and skill. When you're trading, you're going to think about risk management like wearing a seatbelt. And so in this case, you're being smart and not just bold. Strategic traders are going to be intentional about their strategies, and they're going to have clear stop points and also size their trades to manage the risk. That's going to be the opposite of gamblers. They're usually just going to go with the flow, look for the big win, or what could just as well be a big loss. I would say a gamble trade would be just taking a trade from someone without doing any technical analysis or actually looking at why we're taking the trade. So it can honestly go either way when you're gambling. Now, I actually just posted a video about risk management that deep dives into these different topics. So we talk about the different ways that you can actually set your stop losses based on the volatility and the swings that you're seeing in the market. So that's from high to low during your trading time frame, or even around key chart levels like support and resistance. And we also go over position sizing. Okay, so it's also really important because you want to figure out how much of your capital that you should be putting into each trade. And that's going to depend on the level of risk that you're comfortable with based on the size of your account. Let's talk about skill and strategy versus luck. Behind every successful trade is a foundation that's going to be built on an understanding of market dynamic. It's more than just trading off of gut feelings, but what it is going to be based on is research, continuing to educate yourself about the market, trends, topics, and then also being able to adapt to new information and market news as it comes. And so this is what separates trading from a gambler. And that's going to be somebody that leaves everything up to chance. The question I get asked the most is about the best time to enter a trade. And so my answer is always going to lead towards the strategy. There are so many different strategies that you can trade, but honestly, no matter which one you choose, it's always going to come with its own framework. And so that's usually going to have the setup with a clear entry signal. It's also going to have different points for setting your stop loss or potential profit areas. But always remember, every trade is going to be unique. So, it may not follow that verbatim, but it just kind of gives you a foundation. And so when you trade like this, it's going to be perfectly aligned to the ideas from Annie Duke's book, she highlights how successful poker players, gamblers, and even successful traders have a similar approach to how they make their decisions. Here's a quote from the book. What makes a decision great is not that it has a great outcome. A great decision is a result of a good process, and that process must include an attempt to accurately represent our own state of knowledge. So, like we said, indicators and signals are going to be key here because they're what give us something solid to measure and also help make sure that we're actually folding in what we know and think right into the heart of our decision making. And I know, what a lot of you are going to say, you don't use indicators. And I promise you, I completely understand. Maybe in the past 6 months, I've been leaning more towards price action and volume analysis. And that basically means I'm looking at the candlestick charts, looking at those patterns, and also matching that with volume. Sometimes I may not even have more than 2 indicators on a chart, but these all give you different leverages. Okay, so they're different tools. Next, I want to talk about probability and odds. So when we're talking about trading and gambling, trading isn't all about predicting outcomes like gambling, but it's also about understanding the probability and using that to your advantage. Okay, and so when you're using things like quantitative analysis in your trading. And so if you're not familiar with quantitative analysis, chemistry people, what's up? This is a textbook definition of quantitative analysis in the financial market. Okay. But basically, you can look through old data and see patterns to get ideas about where the market is going. So, you have a lot more leverage with strategic trading. Now, another concept is expected value and edge. Okay, so we're talking about all of these edges that we have. So in trading, kind of circling back to thinking in bets, we have an edge, and that edge is the strategies or the signals that we interpret that give traders a higher chance of making profitable decisions. Okay, so traders are going to look for a positive expected value. That means they expect to make more money than they lose over time by using these. So let's just say, for example, that you've been looking at a particular stock and it's been trading in a range that has clearly defined support and resistance zones. When you're looking at this pattern and you're waiting for the price to reach these areas, then when you're doing that, you're strategically putting in your buy order either near the support levels where you're looking for the price to move up towards the resistance, or then on the opposite, when you're buying in at the resistance and you're waiting for the price to move down to support. But of course you have to be aware of potential breakouts around these areas. But then for that, you can factor in analyzing volume or even other indicators around those support and resistance levels that are going to give you a higher probability of success. And so this type of strategic approach, that's what's going to help traders capitalize on, those range bound movements using those technical indicators for their entry and exit points without relying on luck. Okay. Now this is completely opposite from gambling, where the house's edge, meaning that the odds are usually going to be stacked against you, you're going to see a negative expected value over time. So gamblers on average, they lose to the house. The house always wins. I want to briefly talk about the psychological aspects of trading versus gambling. I just posted a short video on trading psychology, but I honestly just wanted to mention in this video a couple of things. So first is prospect theory, and also the concepts of risk aversion and loss aversion to understand how investors make decisions versus just gambling. Prospect aversion, that suggests that people value gains and losses differently. And some people are going to put more weight on guaranteed gains versus getting more potential gains with more risk. Okay, that's saying the loss hurts more. And that concept is risk aversion. That means that that person may choose a 100% guaranteed gain of $500 over a 50% chance of getting $1,000 and a 50% chance of getting nothing. And so basically in trading, risk aversion shows that fear of missing out, or FOMO, on sure gains. Those are going to outweigh the temptation of larger uncertain gains. That sounds pretty responsible as an investor, in my opinion. Kudos to that. That is who you want to be. At the same time, you have loss aversion. Loss aversion highlights that fear of loss affects some traders more than the potential for a gain. And then this can get to the point where people would rather take a riskier option to avoid a definite small loss. So when you have an understanding of loss aversion, then that can really help you recognize, when your fear of loss could be causing you to make irrational decisions. Like, for example, holding on to a losing trade longer than you needed to, hoping that it would recover. All right, you guys, well, that wraps up our deep dive into what really separates smart trading from gambling. But I hope this video is giving you a little bit more knowledge on recognizing and how to use the power of strategy, risk management, and always continue learning in your trades, okay? If you have any questions or, you want to share your trading experiences with different strategies, then please make sure to leave a comment below. All right, let's get the conversation going. So trade well, and I'll see you on the next video. All right.